course, we have multiple sources of lenders to shop because every bank has their own set of rules and their own set of policies. So if you're insured, so which again, less than 20% down, there's also 3 insurance companies. There's the Canadian Mortgage and Housing Corporation, which all of us as taxpayers, we own a piece of. And then there's 2 other private insurance companies, which is called Genworth Insurance and Canada Guarantee Insurance. They do exactly the same thing as Canadian Mortgage and Housing Corporation, except for they are private insurers. Now they do have different sets of rules and policies relating to self-employed, relating to, especially self-employed, let's say the #1 aspect of it. So they have in different documentation. So we're able to send it to each, depending on which lender you work with. They do some work with those insurers, so we're able to get deals financed if you're less than 20% down, depending on what insurer we use. Now, the interest rates, of course, I talked about, are the lowest in history. We've seen, we thought last year there was going to, when of course the rate war came out, and of course Flaherty, as you can see in the papers, telling the banks not to stop having rate war. There's a rate war on, okay? Flaherty's trying to say that. I'm telling you right here, there's a rate war, and it's happening right now. So for you, the consumer, this is the best opportunity you can ever have. And I've been doing this 21 years. It's phenomenal where the interest rates are at right now. So 5% down, you can still buy. You can still use your RRSPs too, if you want to be, if you're a first-time home buyer or have not owned your principal residence in the last 5 years, you're able to withdraw up to $25,000 out of your RRSPs tax-free. You do have to pay that back over a 15-year period, so you have that flexibility. That's still in effect. And in addition to that, you're able to use gifted down payments, so which is we're seeing a lot of people do, especially first-time home buyers, as our parents are aging. They seem to have some extra cash available, and if you're nice to them, they'll loan it to you or gift it to you as a down payment, so you have that flexibility. So those programs are all still in effect. So there's still lots of people for first-time home buyers to still get in this marketplace, and especially right now, as I've said with a lot of the clients we're working with, is you're able to, at 2.89, 2.79% interest rates, even if you went straight to monthly payments, 50% of every payment you pay is going directly towards principal, right off the bat. That hasn't happened before. You know, you're paying down more principal and getting more equity in your home than you ever had in the history of mortgages. So it's a really important feature of that. Again, just to show you, we were showing again about in 2007 with a 40-year AM. This is the last time the interest rates were sort of above in that 5% range. And we had a 40-year AM, you'd be paying $1,831 a month. And of course, we did this about a month ago, it was $329, and of course it's dropped even since then. But your payment on $350, the same money, over 25 years is $1,700. So the illusion that the longer amortizations, you know, have made it less affordable in Vancouver is not necessarily so. You know, because the interest rates have gotten so low, the affordability factor is still there. One thing I will also mention too is if you're not a first-time home buyer, or even if you're a first-time home buyer, if you have more than 20% of the purchase price down, lenders are doing still 30 and 35-year amortizations. So those are still available to you, so long as you have 20% of the purchase price.